All right, y'all. So I want to talk about a trade that I was looking at this week for Friday, which is the 10th, and how I usually mark up my chart. So I do trade using ICT terminology, and I trade NQ. So I want to go. I always start off with my daily chart. So right here, as you can see, I have my external liquidity mark. Price like to do two things overall. It likes to go from external to internal, and then back to external to internal. Okay, well, external to internal, internal to external. Okay, so with your external liquidity, what I like to mark off are the swing highs and lows. So I do have this swing high, which is from December 26th. And then I have this swing low, which is January 2nd of this new year. So right here, when price had this bullish momentum for these 2 days, you can see that it went to internal liquidity. So if you draw that, that is what we call a fair value gap right here. So it went in, filled that liquidity, and then the day after the 6th, which is the 7th, it closed outside of that liquidity. So when I got on the charts Friday, we were right here. So this is the last candle, so you can pretend this candle isn't here. I was like, okay, we already went in and filled that internal liquidity. Now I'm expecting us to take out this external liquidity right here, which is typically what you can see happen. So I like to go down on the lower time frame. So we're on 4 hour right now, and let's check the news so you guys can see. I always like to check the news as well. Forex Factory. Friday we had 8:30 news. So this was NFP week. We had 8:30 news and 10 o'clock news. So this was definitely another confluence for price to drive down to take out that external liquidity. So, but remember, we always react to price. Okay, we don't predict. But based off of this, when it left here and we were down here, at that point, I like to, if we go back to the daily, so this was the day before this candle. I also like to mark off the previous day and high. Previous day high, previous day low. Okay, so that's our previous day low there. Alright, and we're going to go back to the 4 hour. Okay, so at about 6 o'clock, what happened was price swept previous day high, took all those stops up there, did a stop hunt, and then came down and swept previous day low. Alright, so we go down to the hour. I like to always go to different time frames to see how price reacted in certain areas. So another indication that I see is that we have this buy stop liquidity here. So that was a magnet for price. Okay, so we had that right there, and price drove up to that, took all that out, and you see this is just a choppy mess right here. Everything was pretty much rebalanced. So it came down, and this external liquidity was definitely a magnet for price. Now, I trade the New York open session. So if I would have traded around that time, this is a 9:30 candle. Let's go to, I believe it's 15 minutes is where I saw the setup. I like to use a unicorn model in a sense. So what I like to see is displacement, market structure shift, a pullback into like a fair value gap or breaker block, and then get my entry after retest. So what I can see right here, let's actually, let me see if it looks better on the 30 minute. So yeah, so right here This is a invalidated order block, which makes it a breaker block. Okay, on the 30-minute. And you also have this fair value gap overlapping on the 30-minute as well. So that is more indication that my setup is there. So fair value gap, 30-minute. Okay, and this is what you would call a SIBI. So price came directly up at 9:30, tapped into this breaker block fair value gap level. If we zoom in, you can see it a little bit closer. Wicked and dropped down. So I would have had a limit order placed right here, which is 21,196.25. And if you look at the high, if you look over here, it came to 21,197.25. So really about 2 points of, not even 2 points of drawdown. So this was a perfect entry. And what I would have targeted, I'm going to have my stop loss a little bit above here or above the breaker, whichever one. And I would have targeted this external liquidity. So that blue line down there, that's the external liquidity. Okay, so that was 213 points. You would have got out about 10 o'clock. So a 30-minute trade. Let's do the math. If I were to do 1 mini, that would have been 20 a point. So see if I can get my calculator. How many points did I say? 213. 213. 42.60. 3 micros would have been $2 a point, but we got 3 contracts, so 6 times 213, 1278. And that is what you could have made. So this is just my trading thoughts. If you guys enjoyed this video, let me know in the comments. I'm going to start doing more of this. I'm not necessarily teaching. I'm just going over the plays that I normally look at and just sharing my thoughts, and also for me to go back and look, because this will be like a journal for me as well. So make sure that you like and subscribe this video and comment any questions that you guys may have, and enjoy the rest of your day.